Wow. What an entrance.
I told you I was shit.
We've interrupted pool day at your house, Raoul.
I'm just no good at pool. That's the thing. I've just got no coordination generally.
Did anything go in there?
No, nothing.
I don't think so. I don't think so.
Aim for what? Look, it's another episode here of REKT Vision. It's myself, Mando, OSF. We've got Raoul on here today. Pretty busy week again in the markets. I think last week we were settling in and Bitcoin was a little bit higher. Solana was a little bit lower and ETH was around the same, but there's been a lot of headlines this week. We're going to go through it all. So we're going to talk about how Bitcoin has obviously gone a little bit lower. It's had some selling from Germany, from the US government, and also these overarching headlines around Mt. Gox distributions. We've had probably the biggest news story of the week was around Solana, the Solana ETF, and they've also brought in instant payments on X via Blinks. We've had stories around ETH. They've obviously going to have the ETF next week, and you've also had Coinbase partner up with Stripe, which is a relatively big move. And then if we have time, we're going to get into various different things on macro, in particular what's maybe going on in Japanese banks and what we should focus on, and some talk about stablecoins with introduction of Mika and some rules in the UAE. Anyway, gents, it's great to see you again. How are you feeling about the market this week?
It's, the news flow's been incredibly bullish, apart from that selling. We also missed the ZK compression thing for Solana, another big news. I mean, it's been endless big news, and today's been a bit weird. I don't really understand what's going on today.
It's just this Bitcoin supply overhang, and I know we'll talk about it as one of the topics, but it just feels like right now we have really strong, positive, fundamental headline after fundamental headline on some things that are actually very structural to crypto as well. So some of the most positive headlines I've actually ever seen. But that's been overlaid with this technical sell pressure. So we have these little pumps and we have these kind of moments where we think, oh, this is finally it, we're going to break out. And then whoever's got it to go is like, great, thanks for the higher prices. Here's another few thousand Bitcoins or whatever it is. And then, we get knocked back down again. But it just really reminds me of summer last year when we had the inflation coming lower, then we had BlackRock applying for the ETF. And remember, Bitcoin was stuck around 30, 31K, and it had 3 or 4 different attempts to try and break out and just got knocked back down to 27, 28K. And we were all scratching our heads thinking, how is this possible with such positive headlines? And it ended up being a lot of pent up pressure. And then finally in November and December, we broke out. And I think we're seeing a rerun of that because you just can't ignore the positivity of these headlines. But someone's got to indiscriminately sell something at any level, they've got to do it. And that's what we're seeing right now.
Mando, you just put the chart up of that article about the RSI.
Yeah.
The other one I've used is the 30-day historic volatility. So Bitcoin gets down to this kind of 20% level. Every time it's got here over the since Bitcoin started, it's basically done something between a 70 and 200% rally. And Solana's version of that is volatility down at 50%. Every time it gets there, it has a huge rally. So it feels like it's so close.
Yeah.
It bounced, Solana bounced off that lovely wedge pattern, came off the bottom. Today's a bit weak in Solana, no real reason. And it just feels like the next move is, the ripening of the bananas.
So let's get into that a little bit, because this was a pretty dangerous week for Bitcoin. Bitcoin touched 58K or just over 58K this week, and then rebounded. It obviously hadn't hit a lot of different metrics, which made it look oversold. I think it was the biggest net selling day in 18 months. The RSI went below 20. Fear and greed index went into fear. A lot of buy signals, I think, for kind of long-term players in the market were starting to be hit, and we had this nice break back above 61K, even 62K, and then today we've had a little bit more selling. Just reading between the lines, you still think that the banana zone is still on for this summer? What we were talking about, and perhaps the other piece of news that's come out which caused this selling, there's been pockets of Bitcoin that have basically been found. Firstly, it was a German government coming in who have in the low single digits of billion Bitcoin dollars that they need to sell, and they've been clipping out around 50 to 150 million a day of this. The US government actually came in and they sold a small amount. a couple of days ago, and they have a much bigger portion. So they have over 10 billion worth of Bitcoin. And then you had obviously the upcoming Mt. Gox distributions, which you kind of already knew about last week. But do you think that these pockets of supply are going to push back the banana zone? Do you think this is going to be a more extended consolidation period here?
I don't actually. I think we finished the consolidation period. It's very typical around the halving time, the election cycle. It usually does this and usually finishes in July, maybe August. We also, don't forget, if you look at FedNet liquidity, it collapses into the end of every quarter. So that's as people the banks window dress their balance sheets. So we saw FedNet liquidity come off very sharply. Today should be the last day, and then it gets rebuilt again. So whether that affects assets as well, even though it's quite well flagged in advance, possible. But overall, I think the price structure of what everything looks like, it looks like we hit the base. Solana, I'm looking at the chart. Solana in April, we came down to just below 120, came to 118. We then rallied up, back down, formed this wedge, perfect pattern. My guess is we just go up from here. I'm just generally very constructive from here.
Yeah, for me, I feel as though we've probably hit the local lows on Bitcoin there. I think that 58K just kind of hit a lot of levels for people that's going to be a line in the sand. But I do think this consolidation may be a little bit longer now, just because it's difficult for people, like OSF said, to not think they're about to get dumped on when you have all these different pockets. And it's quite sensationalist when it comes out, right? It's quite like, the German government.
But don't forget, next week we've got ETH ETF news.
Yeah.
And before you know what this space is like. It's like a goldfish. It remembers everything for about 3 minutes. Then it's like, what's selling? It's all about the ETF now.
Do you think that's a bullish thing? Do you think that's a bullish thing, the ETF? I'm a little bit worried about that ETF.
I was going to say it's
Are we scared of grayscale?
Yeah, I think scared of grayscale, but just scared of do people care as much about ETH as they care about Bitcoin? I think they will, but it's a risk. It's definitely a risk. I don't think a successful launch is really priced in my opinion, because the grayscale thing we've seen with what happened with Bitcoin, and I think people are skeptical on it. I mean, the Bloomberg reporting on it has been very skeptical on it as well, and most of these guys didn't even think it was going to happen. So,
my guess is the volumes will be massive, but it's going to be ARBs, because what they're going to be doing is buying the ETF which doesn't have a yield and selling the futures which has the yield priced in. I mean, they're just ARBing the yield.
Yeah. So it could be good if we just report headline numbers and not talk about the basis trade, and
which is kind of what we did with Bitcoin, right?
Right, and that's how the Bloomberg team seems to report it. So
yeah, that's a good point. The yield is even better on ETH, so it's maybe a better trade, which is interesting. You've obviously had Athena, which has come in and basically done that trade in huge size already this cycle. But yeah, we should see inflows. I think I saw headlines this week that I think it was Van Eck or Bitwise, one of the major CEOs of these ETF companies, said he thinks 15 billion of inflows in the first 18 months for this ETF, net inflows. Obviously, part of that will be you have to deal with the outflows from Grayscale's ETH Trust, but I think that'd be a decent figure to have a 15 billion ETH ETF ecosystem in 18 months. I think that would put us in a good spot.
Because the ARB is more attractive on ETH than Bitcoin, do we see people rotate that basis trade out of Bitcoin into ETH? And as a result, do we see ETH BTC going higher because people are just looking at headline numbers and thinking, oh, that's, if you see like days where like Bitcoin ETF outflows Bitcoin ETF has outflows and ETH ETF has inflows, does that cause ETH BTC to go higher because everyone's
interesting.
Yeah, now they're switching to this. Right? Yeah,
probably. I mean, there's definitely a big ARB game here. It does vary sometimes. So ETH, it's not continual that ETH has a better funding.
Well, it will naturally, because the ETH futures holds the actual staking yield in it.
Oh, does it?
I see.
Yes, of course it does, because that's how futures markets price. If you think of all ARBs, they're basically dividend ARBs or tax credit ARBs or whatever they are.
Well, the ETF is non-yield,
and it can't. So therefore, it can't trade at a premium. So therefore, there's like an infinite amount of that ARB that can go on. I mean, I used to do this in index ARB stuff for clients, because there'd be different tax credits you know, the Italian one, the French one, and they just did it infinite size because they got balance sheets. And, you know, it's bizarre players that do it. I mean, one of the biggest players in index arb in the world was Cargill, the commodity company, because they've got massive balance sheet. So they would just use excess balance sheet and do every arbitrage in the world.
Yeah, the amount of CDS index arbs that we did in our 10 years is well into the thousands, if not tens of thousands.
They used to allow them to book the profit on day zero. So some people had financing agreements with the banks where they could book the market profit on day zero. So they would just do infinite size. And in the end, some of those firms actually went bankrupt and they had to unwind it, and it was all horrific. So whenever I hear of infinite size of basis trades or arb trades, I'm always like, well, yeah, this sometimes doesn't end so well.
But
I had a question on that. Go on.
A
question on that for you, Raoul. Sorry to divert from the topic, but I remember sitting in the office thinking, oh, these guys had this infinite amount of trade on. The basis has gone from 4 bits to 5 bits to 10 bits, 20 bits, 40 bits, and then suddenly they have to start unwinding, even though they're delta neutral trades. Do you have a concept of like how wide the spaces needs to get before people start being like, oh shit, we're too big in this now? And
I'm not sure about the futures contracts. Do they have physical delivery? If there does, then it's fine. I mean, they're probably doing the arb in spot markets anyway, but it just opens it up to other players who can't have Bitcoin. It depends where the futures contract trades versus fair value and whether it's physical delivery or not. If it's physical delivery, as a lot of index arb was in equities, it's fine. You never get that problem. But, you know, swap spreads and stuff like that, I mean, I helped both put on and unwind the long-term capital book. And that was ugly.
You think they have physical delivery in Bitcoin? I mean, I guess they probably do. I don't know, though. That doesn't seem like
we need to Google this.
Futures contracts, Anyway, there does feel like there's probably going to be some risk that we're not aware of. But yeah, I think that's an interesting one. We could see more inflows into the ETF than we originally thought. I'm going to bring forward the macro bit of the conversation because I think it's kind of one that we've been speaking about why the banana zone might be here. There was a very good graph, which I think Delphi Digital put out last week, which just showed the complete correlation between Bitcoin price and M2 money growth, global M2 money growth this year. And that this dip is slightly correlated with that. So avoiding all the noise, avoiding all the German government's got to sell, you know, the US government's got to sell, ignore Mt. Gox. This is really just a global liquidity play, which I think plays into your narrative the strongest. And as we go into H2, you have 10 of the top 11 central banks looking to cut. And it's really just about the pace of the cuts, it feels like, and other avenues for them to turn on the taps. I'll bring up the article by Arthur Hayes, which I sent to you, which I thought was super interesting.
The other thing about this is the TGA has been refilled. Usually after tax season, they draw it down 250 billion.
Yeah.
And that's normally why we get this kind of period, which is quite strong. So I think ignoring all the other sources of liquidity, just generally, the Treasury needs to draw down some of that TGA as normal course of business. Or she can keep just issuing short-term bills, which is basically the same issue.
Yeah. I mean, that's the obvious way. This piece from Arthur Hayes, I actually sent to you because I thought it was relatively interesting, but it's this that we got asked on the show even last week, should we be worried about the Japanese yen, about Japan? I think we should be worried, but probably to the upside. Like it feels as though the Japanese banks are going through a very similar sort of issue that regional banks were going through 18 months ago. They've held huge amounts of US Treasuries, and the dollar yen basis FX swaps has moved against them that they now have to sell these. And there was a Japanese bank, one of the most prominent ones, that came out and said they need to sell 65 billion of US Treasuries by early next year. And this is kind of a canary in the coal mine. Japan, including its retail banks, have hundreds of billions into the trillions, if you include the BOJ, of assets here. And we just need to work out how this is going to be dealt with. Now, Arthur Hayes put forward the idea that this is actually, these bonds will end up being bought by the BOJ, and then they will use the FEMA repo facility to essentially print dollars to buy back, or you can basically put these treasuries to the Fed through that facility and get back dollars. So this will be a huge amount of easing, which most people won't even be aware of, to the tune of hundreds of billions.
I wrote about this in Global Macro Investor couple of months ago. My view here is same as Arthur's, who's also a GMI subscriber, but I think we're being set up by the BOJ for a nice spectacular bit of shenanigans. BOJ are very clever at what they do. They've been manipulating FX markets forever, and everybody loses money trying to fight them. My guess is they're sucking in the last positioning now. The Chinese need money too. The Japanese banks are the Eurodollar market. They're the largest participants in the Eurodollar market now. They're short of dollars, which was the point.
Yeah.
Somewhere, the US is going to give them infinite line to be able to intervene. And that will flow back through the banks, both into treasuries and also to China, who desperately need the dollars. And the Fed don't want to give them a direct liquidity line. So if there's a source of instant shocking liquidity that can come, the most perfect setup would be the Fed cut and the Japanese intervene. That would just nuke everybody. And I've seen the Japanese do this many times before, and they tend to do it with the approval of the Fed, because that way you get bang for your buck. We know that Yellen's been in China twice. So, Yellen is the world's biggest bond salesman, well, junk bond salesman. She's the Mike Milken of the era. She used to sell those bonds, and the Chinese are saying, we ain't got no dollars to buy your bonds with. It's a really simple equation. And it's like, okay, let's figure this out. How can we get you dollars so you can allow your property developers and everybody else to pay their dollar interest debts, and you can recycle it into treasuries? And I think it's via Japan.
Yeah, look, I would really encourage people to go read this article. Obviously, I know you've been talking about this in GMI too. It's a 12-minute read. It kind of gives you a good concept of what's really going on here, and that even a cut from the Fed won't fix this. Although they're sitting on huge mark-to-market losses, it's actually the move in the dollar-yen hedging that is the painful trade here. So they're going to have to unwind it in all scenarios, and they're going to need dollars for this trade. I feel like it's the sort of thing that most people won't be paying attention to it even happening. Like, this isn't going to be front page news that, Fed opens dollar yen swap line or increases that. So where are you actually looking? Is there any sort of points of data that you're looking at where this will show up, where it doesn't hit mainstream media, but investors will be able to see, right, all right, they're turning on the switch here for China. They're turning on the switch here for Japan in terms of liquidity?
Generally speaking, the market's fixated in dollar yen's going to 200, 300. Oh my God, it's collapsing. They've lost control. Okay, so that's where the current narrative is. And people expect intervention at some point soon. They're waiting for it. It's really going to be about the size of intervention, because if they go big, it shows they've got the backing. And then you'll see it, whether it's versus the foreign central bank reverse repo or via the swap lines or whatever the mechanism is. Yeah. Don't forget, a lot of the time they try and hide the mechanisms as well.
That's what I mean.
So it's really the size that they go in. If one day we come in and dollar yen's down 1.5%, and then it happens again the following day, it's on. Yeah, and that's just a net injection of liquidity into the system in massive size from the Japanese.
Okay, so you're really the easiest way for people to focus on this is just to look for a reversal in dollar yen.
Exactly. That shows it's on.
Yeah, I think that's probably a good way to look at it, and I do think we will see this soon. Like, this feels as though Yellen can't be having this going into the election, right? That you see a massive blowout in bond yields. This is something that they're probably going to have to deal with over the summer before that happens. Obviously, the debates haven't gone their way. The idea that bond spreads start smashing out towards higher levels would not be taken, I think, too kindly either.
So DMARC on dollar yen gave a 9.13 top today. Let's see what the weekly is. Yeah, I mean, the weekly's it's just put in a 13 this week as well. So these kind of things, there's RSI divergence. It's all kind of stacking up to the BOJ actually use technical analysis. They're pretty good at doing this kind of stuff as well. So let's see. But the dollar is too tight, and it reminds me quite a lot of 98. Was it 97, 98, where everybody was long dollar yen. I mean, in gigantic size, one of the biggest trades the world had ever seen. And the Japanese intervened. Everyone's like, yeah, no big deal. and then the thing utterly collapsed. I mean, Tiger Management, all of these guys got completely carried out. Apart from Paul Tudor Jones, who managed to get it right.
Right. So you think it's going to be one of those sort of trades? I mean, people probably just aren't aware of the size of the foreign holdings by Japan here. Japan is the number one holder of US Treasuries. Like, and it's not even, we're talking hundreds of billions into the trillions if you include the BOJ's retail banks. So like,
yeah, and what nobody wants them to do is sell their treasuries, so they have to lend the money to sell dollars.
Exactly.
And so that is money being lent into the system. That's dollars being released into the system. That's banana zone.
So that is the one thing I would say, is that you can get very caught up in the German government or Mt. Gox, but at the end of the day, if the BOJ gets 500 billion, and you speak about this, as money comes in at the bottom, it's eventually going to get up towards Bitcoin and everything's going to rally. The specific headline that we got this week, and what the reason that we even had the topic title, was around Solana. Solana did have a very, very big week as an altcoin this week. Most notably, you had headlines around Blinks, which is their instant transactions, which can be done through any website, but X is probably going to be the main one. It can very quickly become the payments network and blockchain rails, really, for X. And then secondly, yesterday, we got headlines that VanEck, which is one of the major ETF providers, is going to come in and file an S1 filing for Solana ETF. Today, you had the Bitwise CEO, I think, hint that they might do it too. We haven't heard anything from BlackRock or Fidelity, but there were rumors a few weeks ago that they were going to, at least BlackRock was going to go forward. In fact, I think I saw this week or last week that 25% of all the ETF inflows this year for BlackRock have been from the Bitcoin ETF, 55% for Fidelity. So they obviously have massive incentives to keep this ETF train going. What did you make of this? Because it feels as though Solana ETH, Solana Bitcoin, for me, have bottomed now. This really feels like a game changer on top of that CK compression that we heard about last week.
It's different though, isn't it? It's different to Bitcoin. It's different to ETH. For both Bitcoin and ETH, you had futures ETFs, you had active futures markets for a long time. Yeah. Solana doesn't have that. It doesn't have that. So that argument of transparency and active markets, and the fact that because a futures ETF exists, we then therefore should have a spot ETF, that it doesn't hold for Solana. So look, all these ETF issuers have every incentive in the world, as you say, to have as many crypto ETFs out there, because they're making 5 to 10x the amount of fees in these, and they're doing a ton of volume on them compared to their other ETFs as well. So they're all going to go for it, but there has to be a line. The SEC has to draw a line somewhere. And so I think like the bigger question as to whether this actually gets approved or not is not really about, it's not even really about whether BlackRock applies or not. It's really about what does the US regulatory landscape for crypto look like in 8 to 12 months' time when this becomes relevant. Is Trump the president? Is Gary Gensler still chair of the SEC? Has the US regulatory landscape changed? And without that change, I think even with whatever lobbying and whatever strings were pulled with the ETH ETF, it's very hard for Solana to get approved in its current form, I think.
Yeah, what did you make of it?
I think VanEck are just planting a flag. I think they want to get some feedback, figure out what is possible, what's not. I don't think anybody expects it to happen instantly, but it just shows the direction of travel, I think. Could it be a 2025, 26, 27 event? I mean, we don't know. It just doesn't feel like it's this year unless the regulatory regime changes. The other thing we need to think about is, obviously after last night's debate, the probability of Biden being swapped out is extremely high. So who is that going to be, and how's that going to impact our playing field here? It feels that Newsom is the one that's being positioned, but who the hell knows? Could be anything. Newsom being California, probably pro-tech in a more meaningful way. I think the Biden administration has managed to lose all of the big tech founders to Trump, which is an extraordinary. They're all Democrat voters, and they've all gone to the other side. Newsom, maybe he can pull them back, because don't forget it was Newsom who was organizing Xi to come and meet them in California. That's a whole other story. But there's I don't know. That's the thing we all need to think about, is what's the probability that Newsom is pro-crypto.
Yeah, I'd love to get into that some more. We'll just link on the Solana bit for a bit longer, because I know you've been posting around Solana ETH and Solana Bitcoin. What's your view there? Do you think this is now going to be the leader from here?
Yeah, I mean, I'm putting out a video, probably go out today, which was just showing all of the relative things that I'm looking at for this.
Yeah.
Why I think the trade is on, and the Solana Bitcoin chart is super clear. It's a beautiful stair-step consolidation, stair-step consolidation. Same with the ETH one. So again, they all hit the bottom of the wedge, triangle, channel, all of the relative continuation patterns, goes higher. And if it does, then we've got another big outperformance to come from Solana. So I just think, if the space is going to get liquidity, the further out the risk curve gets more. Solana's got all the narrative and a real huge amount of traction. And we still haven't got Fire Dancer out yet. So there's a lot here. I think it's very difficult to beat Solana this cycle. Just super difficult. Even if ETH manages to find a massive use case, it's suddenly, YouTube is being tokenized on Ethereum. It's still going to be very difficult to beat the narrative and the momentum that's currently behind Solana.
Yeah, how do you define that in terms of this cycle? I think I was looking at Sol versus ETH and just Sol, and if you look at it on a year-to-date basis, ETH has outperformed. But if you go back to obviously November or October last year, there's been a huge outperformance of Sol. So I think for me sometimes, and look, I own both, I'm bullish on both, and I always wonder in my head, should I be switching? Should I be overweight more one than the other? But for me, sometimes I wonder, like, have we already seen that Sol outperformance versus ETH, given the moves in the last, let's say, 12 months? And that's why on a year-to-date basis, it actually hasn't been the greatest trade. And because you have the ETH ETF tailwind, and we saw the impact that had on Bitcoin. I mean, Bitcoin moved from whatever it was, 45K to almost 70K post ET in the few weeks after the ETF. Like, have we seen all that stuff happen? And are we now just kind of in this? Have we lost the alpha, and now we just have this kind of beta to ETH? Basically, is the question I'm asking.
I'm just going to interrupt slightly, because there is a second filing that's just happened. 21 shares have just filed for a Solana ETF too. So that's the second. Wow. And there was definitely rumors that Bitwise would do it. So this is interesting to see if they all start lining up. If BlackRock,
Amanda, can you make that a weekly chart?
Yeah. Let's see if you can in the back. Yeah.
No, you've gone to.
This is actually Arthur doing it.
Oh, Arthur, can you go to weekly? There. Yeah, you can't see it as well as I've got it drawn, but to me, it looks like if we just see that move in the early 2024, it was like an ABC correction, then shoots higher. ABC correction, shoots higher. It's very typical. That's what I think. I also am cognizant of your view, Ovi, that this could be flat to sideways, and it just is a beta play. But then I don't mind that, as long as it's not going to nuke versus ETH. I don't really care. I think it's the best way to look at it.
One thing that did surprise me is that, we've bounced on this good news, but we haven't really bounced that much. Like, you actually take a step back, Solana has just come out with a 10,000 improvement in improvement in scaling. It's got an ETF being applied for, but now by 2 different issuers, and it's basically built a whole payments network for X alongside any other network. And it kind of bounced 7% on that ETF headline. Has now been sold back down.
Money. We need new money.
That's exactly it.
Price tells you a lot, though. Yeah, that's what I mean.
It just, so global liquidity has been flat. That tells us no new liquidity. The business cycle hasn't really turned positive. That tells you earnings aren't being reinvested, or people aren't making money. So you're kind of stuck in this no man's land for now, and the next one will be the ETH ETF. So that'll be new money into crypto land, and then we can all play with that money for a bit. It's basically how it is. We need to think of it as this is a crypto land economy, and for crypto land economy to grow, we need foreign direct investment or even hot money flows. Either way, we need fresh capital in.
So let's go back to the point that you made, because I think it is interesting. We are obviously 24 hours just after the debate of Trump versus Biden. What do you think? So you think now, I saw Polymarket now has a 40% chance that Biden drops out. Trump's odds of winning have now gone up to 65%. Do you think there's a play here now for the Democrats to still win this via Newsom? Do you think he's got a shot? And do you think Biden even drops out?
There's also RFK as well.
That'll be good for crypto.
I don't know. Politics is a weird game to predict. I try and keep out of it all.
It does feel like for crypto, Trump has obviously been very pro, and Gavin Newsom, I think, would be more pro. So we're starting to look at a better outcome in all scenarios. But it can be important for some of the policy stuff, I think, that could even be done over the next few months. There's obviously lawsuits already, even this week, between Coinbase and the SEC again. And these sort of things like the Solana ETF going through, these are at the end of the day, they're very political decisions, it feels like, at the moment. Even the ETF towards the end felt like that. So yeah, it'll be interesting to see how that one develops. But I do think that it's now seemingly more likely that we're going to get a more pro crypto
here's a question for you both. Why are the Democrats so against it? Do we see they are, we see that, but why? What's their game here? This is what I don't understand. If I play it in my head, I'm like, well, you're clearly alienating 110 million Coinbase account holders. Sure, only like 15 million of those are active right now, but there's probably 50 million crypto holders. Why alienate?
I think most governments who feel like they have a lot of power are probably against it because it's a threat to their power. And if you look at places in the world where it has been adopted, it's governments trying to get competitive advantages against other countries or other nations, right? And it's clear, like, Trump's been like, okay, cool. Trump doesn't really care about crypto, right? I'm not kidding myself. I don't think he really cares. But with 50 million crypto holders in the US, he realized it's a massive, needle mover potentially. So he's an opportunist. So he's like, cool, let's just stick this in. And now suddenly everyone has to care. But if you're not backed into a corner to care, or if you don't have a competitive advantage for having it, then as a government, I don't see why you would ever endorse it, because it is, in my opinion, a transfer of the balance of power from you as a government to people, which you want to avoid, I think. That's my view on it.
And what about the UK as well? Because, sorry.
I was just going to say, ideologically, I think it's most aligned with libertarianism, right? And that doesn't really have a political leaning. I think it was originally a more left-wing ideology, which then seemingly has been more right-leaning recently. But I think it's just more, I don't know, it's more of a protest style ideology, I would say. It's anti big government and more self-governance, I would say. And that doesn't really lean anywhere, but recently it's more lent with kind of a protest style vote, and obviously been leaning with more right-wing style people putting it forward. But I think we could genuinely be here in 20 years and that could have completely switched. Do you know what I mean? I don't think it necessarily leans with the Republicans here. It's just lent with them right now. But I've been surprised about it too. I really have. And there was one thing we were going to bring up is also, I don't know if you've seen, but the EU has brought in this MiCA regulation this week. And you have the UAE saying headlines similarly that they're basically going to have huge restrictions now on dollar stablecoins. And we've spoken about on this show that the power of crypto really for the US is the power of the dollar. If they can push forward the idea of the dollar seeping into various different economies, that's dollar power at a time when petrodollars between the US and Saudi Arabia, that deal's come to an end. This is just another way that they can push it forward. And you're actively seeing other countries now restrict it. There's arguments that Tether and Circle might not even get a license to operate in the EU with these new restrictions. They've got to get one in the next 2 days or something. It's something ridiculous. A lot of the major exchanges here in Europe are actually potentially even closing down Tether. So that's how serious they are. A lot of these other countries are now getting against US stablecoins. And for me, the US has got to realize what an amazing position they're in here. They've got to be pushing this technology as strongly as possible, because it really has the ability to dollarize so much of the world here.
Another question, I guess, Ovi, for you is the UK is about to go through an election.
Yeah.
Where does this fit into that equation as well? Because we've got a ton of UK viewers.
It's not been, to my knowledge, and I've been tracking this every day pretty much, UK election stuff. It hasn't been mentioned once. I haven't seen a single mention of it. The last mention of crypto in the UK was Rishi Sunak's great, we're going to make the UK a crypto hub, about 2 years ago. And since then, pretty much nothing has happened except the exploration of CBDCs, and that's it. So it hasn't featured here. It's not something that I think is debated here. I don't actually know the total number of crypto holders in the UK, but it feels like the absolute number is obviously a lot smaller than the US. So it's not as it hasn't gained as much focus. But yeah, it really hasn't been the slightest bit of feature in this election. It's all about taxes and mainly just taxes. Actually, Labour are going to increase your taxes.
Manda, there's another question for you on this. If these governments are trying to stop the US domination of their own economies, right, which is why they want to restrict stablecoins, are we going to see the rise of multi-currency stablecoins? So, an Aussie dollar one, a euro one, sterling, outside of CBDCs, which are domestic currencies, these would be, international markets for them. You're on mute.
You're muted, Michael.
That CoinDesk article, which actually came out, I think, yesterday, was a really good one. It details everything. This is explicitly, these rules are being done to stop dollar stablecoins coming in and taking over power against the euro. It's explicitly in the regulation that's what they're trying to stop here. This isn't some byproduct. They've written this to try and stop it. They basically said if your stablecoin has more than 200 million transactions, then you're going to face massive limits on what you're able to do, which Tether and USDC massively go over. So that's why they're looking at these stablecoins and being like, well, you can't really operate here. So they're really trying to promote euro stablecoins. So we will, I'm sure, see a lot of European exchanges kind of be forced into having these euro style stablecoins as their base asset to a large extent, or heavily restricted / regulated dollar stablecoins. You might have to see like an emergence of native euro issuers of these stablecoins, which I don't know if that's a strong thing. In fact, the Tether CEO came out a few months ago and said this is not a good idea, because you're going to get a lot of smaller players coming in, perhaps with less experience about how to operate in that world, coming in and potentially that's more risk to the system, rather than letting someone like a Circle, which is kind of heavily regulated, be the main dollar stablecoin in that market. So there's been a pushback here, because this could really change the power of these stablecoins in Europe. And then similarly, the UAE, I mean, there were some pretty sensationalist headlines last week. It's like the UAE is going to ban crypto. Now, if you actually read the stories, it was that they're basically going to ban dollar stablecoin transfers, particularly for payments. So there's a big push right now of big economies where, UAE is one of the top places for crypto globally for a lot of different firms, that they are counting on here to the power of the dollar in these sort of countries. If I'm sitting there and I'm looking, they're still fighting over, Coinbase versus the SEC. They should be going like, this is the most power we can have. We should be trying to push this in as many places as possible. Think about all the different countries that are very hot tied to dollar stablecoins. Not all of them are the friends of the US, right? Turkey spends 4% of its GDP right now on stablecoins. Venezuela is a big user. Russia, Ukraine were. I mean, there's been obviously limits since the war there, but dollar power was seeping through the world here, and people are starting to cotton on. I think the US should stop fighting about it and just start promoting it as much as they can.
Yeah, because how I thought about this is just the fractionalization of the eurodollar market. So if you think the eurodollar market got to all the major banks in the world, they've now just gone the next step, which is down to the individual. But that's the complete dollar takeover of the world that's there possible, because people in any country in the world can get access to dollars instantaneously.
Exactly.
People don't get this because we all live in countries where you get access to dollars easily. But trust me, if you're in India and suddenly you can get a bunch of money through into US dollars instantaneously, that's a very, very big deal.
Yeah. So if US, if you're listening, stop fighting over it and realize the incredible opportunity that you have to ensure the future of the dollar for the next few decades. It feels like this is such an obvious move, in my opinion. I did want to linger on the two main payments headlines, which was this Solana Blinks move, which is basically going to allow transactions through X and pretty much any other website instantly. So through a link on X now, you can swap, you can pretty much do anything on Solana. So all the major apps on Solana are now integrating onto X. So you can do any swap, you can do any, you can send Solana, you could do leverage betting on Solana, you could do polymarket style bets on Solana, you can do literally any app you can use now via X. You can stay on X and you can just use any Solana app.
Yeah.
I saw this and I just thought this changes the internet for people.
I don't think it does yet. And here's why. Firstly, you need to have a wallet. So this is not for anybody. This is for the same bunch of apes that are shifting money around this economy. And by the way, I use Safari as my browser. I can't even have a wallet on my Safari. So I now would have to look at X in Chrome where my wallet is attached. So I think there's a lot of friction points still because of this whole wallet idea, that it still doesn't really work because it's just the same crypto people now doing it on X as opposed to going to a landing page.
I would agree with that. Yeah, I would agree with that.
But it's getting close, right? I can see that. It's getting very close to where we can instantaneously make transactions. But it really is, it's like a hidden world for anybody else. So when I'm on my Safari, I don't see any of these. I just see some random link.
The biggest friction point is, biggest friction point is still people setting up their phantom wallet, writing down their seed phrase on a piece of paper and storing it. Like, you still have to do that. That's the problem.
Yeah,
so that's
do it.
What you're saying is a really interesting point, which is, I think maybe for crypto native users, this is a game changer. The other big piece of the week was that Coinbase has now got a big integration with Stripe, and that they are going to help with fiat to crypto on ramps. So, and already with Coinbase Smart Wallet, there was talk about, you don't even have to know you have a seed phrase. This is all going to be integrated into the site to be able to do all these different transactions. Out of those two things that came this week, which do you think is going to be the bigger and better thing, I guess, here?
Well, I think from Real Vision's perspective, that Coinbase Stripe thing is very useful because we have Coinbase Wallet and we have Stripe. And to be able to have a seamless integration is much easier. So now I can take a credit card billing or a token billing for anything. Now, could we integrate the new Solana experience on Real Vision, assuming that if we were to integrate a wallet in whatever experience, that works too. So I do think at the margin here, there is a change. It's not quite there. Coinbase and Stripe just does make it a lot easier for people. It really does.
Yeah, for normal adoption, it's a big thing. Yeah, what did you think, OSF?
Yeah, I think, look, if you're a business and you're making sales in fiat money, but you're also making sales in crypto, it's still a bit of a hurdle to be able to seamlessly integrate those two things. And we're looking at that now for the REKT drink stuff. And it's like, cool, we want to be able to accept payments in crypto because people may want to just degen their 0.1 ETH and, buy a bunch of drinks or whatever. And to create that, it's just so difficult still. And it's not seamless. But having this kind of integration, I just think this is bigger than the Solana thing because it has a larger TAM, if that makes sense. It's more applicable to a larger audience, and there's less of a hurdle for people to get on and just start using it without even realizing they're using it. That's what I think that integration could create. Whereas with Solana, it's like you still need to be Solana native for that until you have some kind of multi-facing seamless wallet integration where you don't know what chain you're on and it just connects to your bank account or credit card. So until you have that layer built, I think this ETH Stripe thing is much, much bigger.
So I think Stripe has got a deal with Solana too, right? I think they came out and they did they had that big video with the Stripe CEO saying how they're going to integrate into Solana. I think the big thing here for me is the on-ramp. Coinbase can can, work with your bank. So the idea that you can have that sort of an on-ramp of straight to bank account, I think is quite a big deal here versus Solana, where there's no centralized exchange. FTX was the Solana exchange, right? And then they haven't got that titan of an on-ramp, I think, here, which Coinbase is really going to be. Coinbase is now incredibly important, I think, for the future of ETH. Now that it's built its L2 on base, I really do think that it could be a cornerstone here of what happens for ETH in terms of onboarding. So yeah, I think that there's a very valid point there that could be the bigger out of the two of them. I think that's it for our topics. We went through the top 6. I think we had some good debates there.
I've got one to raise.
Sure.
So Iggy Azalea hit me up yesterday on Twitter to say, hey, I want to speak to you. I'm like, this feels dangerous to interview her. Yeah. And I'm like, so I reached out to Ansem and said, hey, do you want to take this one? And he's like, yeah, maybe. What do you guys think?
I think you should. It's very controversial, absolutely, but I think people want to hear the whole lowdown, hear the whole story.
But you've never been hated online as much as I have. When these things, people troll. In 2026, they're showing you saying something and assuming that you recommended it. It's pretty bad.
You got to. Here's how you do it in a way where you don't get hated for it. You maybe have Ansem, or maybe have someone who's very skeptical, and you just grill her. You just say, look, we'll do it, but we're going to grill you. We're going to ask you very hard questions, and we're just going to grill you. And that's it. And we're going to take the other side of it. And that way it's like, cool, this isn't just like a celebrity shilling thing. This is like, we're trying to, see if your intentions are truly genuine and if you really do understand the space. And that, I think, can come off pretty well. But, when people have given these people limelight and they're just kind of like, oh, this is great. This is amazing that you have gone from singing to loving crypto. I think that doesn't really do anyone a favor, to be honest with you. So just like come in hard and just grill her, and then that would be a good show. But she's got to know that's going to be the case.
People need to know the blockchain inside out before we can do stuff on it. My view about this is just I just don't feel like you should do it, Raoul. Like you'll get. There's been a lot of celebs that have come in even in the last week. The context here we didn't even give is that Iggy Azalea has done a meme coin, which has done better than 99.9% of other meme coins, particularly celebrity meme coins. And she's done it a bit more seriously. In fact, she was at the New York Stock Exchange shaking hands with various different people like a few days after she did it. Like she definitely tried to do it.
I think she's pretty genuine in it.
Yeah, she has. She has for sure.
It's, as we know, attention is very difficult to maintain over extended periods of time. And very few things do it. And how do you maintain the attention of a meme coin on a single celebrity over a year or 2 years? It's nothing against her. It's just that's bloody difficult to do. And then people make the fatal mistake of building utility, and then people value it off utility, and it all goes to zero anyway. It's like it's a very, very hard game to maintain over a period of time.
What do you do when the times get tough and you don't want to stick around posting memes all day? You want to get back to actually performing as a music artist? Like that's the real question. And then what impact does that have on you as a your
and does
reputation?
It matter is another question.
Does it matter is another question.
Is attention okay to be in 3-month or 6-month chunks and you make money out of it and people lose money out of it, but it's all part of the attention economy? That I don't know if it's actually on the Real Vision platform right now. There's an amazing article from Delphi. I actually put it into GMI as well about this whole attention economy stuff. Well worth reading. It's a brilliant article.
That's my view, if I'm honest. My view, which has really come more this cycle, is that these coins are attention coins. They don't have to be forever. I think people are happy to play the PvP game of them for like a short period of time. We spoke about it on the show before, but like people are literally betting on Euros teams. It's like if England win, there'll be an England coin that rallies because people are playing it actually like almost like a betting on the game. And they realize that after the tournament's done, it won't be relevant. But these coins are no longer forever, and I think that's kind of okay. So even if her coin has a life cycle and it goes to zero, I think that's what people even expect these days. It's no longer right.
Yeah, that makes sense. But therefore, it's not really a great interview for me because I tend to be longer term time horizons and everything else. It needs to be somebody who's in that time frame where 6 months would be a great long trade for them. But really, they're normally, 1 week to 1 month kind of time horizon. That's a better way to navigate this than me trying to impose some sort of ridiculous macro framework on what he's doing with
I
money.
wouldn't link it to the Japanese bank. That's for certain.
Should we, on that note, should we do some questions, viewer questions?
Yeah.
Yeah, let's do that.
10 minutes, whatever we have.
10 minutes of questions.
All right, here's the first question from Melvin on the Real Vision website. I think an easy one to answer. What is the probability we'll get a Sol ETF this year? For me, that's sub 1% this year. But...
Wow, it's low.
Yeah.
Yeah, I mean, Trump's not going to be, even if he gets in, wouldn't be until January, right? What does Polymarket say? This is just a great thing about Polymarket, is it's seeing more volume than ever. So the actual stats themselves must be relatively decent. Are you bringing it up, OSF? Like what?
I'm bringing it up right now, yeah.
It must be below 10% in my opinion, but because these processes take already
7% chance.
Everything's on Polymarket.
Yeah. Exactly, it's great now, and because of the volume, the data's getting better. It's not like you're sitting there going like, "Oh yeah, but only."
I don't use it. Is this built on blockchain?
Polymarket, yeah, it's built on Matic. It's built on Matic. It's one of the only major things that's still going on Matic, I think. But they're talking about taking it to different blockchains. In fact, Solana's got a version which I think is called Hedgehog. Hedgehog is the large version on Solana. And every single major L1 and L2 is now trying to get something similar to Polymarket. But this raise with Peter Thiel the other day, I think they raised at a multi-$100 million market cap, or at least valuation. But they haven't got a token yet. They haven't got a token.
15%. I would have given it. I was thinking 20%. So 12% chance they got.
Yeah, this feels about right. This feels about right. So yeah. It feels very unlikely, but who knows?
All right, next question. This is from Zafar on the Real Vision website. If this year we're going to have one rate cut, then does it mean next year we'll have more? Plus, it coincides with the banana zone plus Sol ETF, basically meaning we could have a very long bull run in 2025. Do you guys believe in the extended bull run thesis for next year and potentially even beyond?
I think it's really difficult to know. I think it's just difficult to know. It depends where the animal spirits go. The liquidity cycle finishes around the summer, i.e. peaks. But many times, usually, the crypto market doesn't peak until the end of the year. So could it peak earlier? I don't know, and I don't want to play for that. One thing just about the rate cuts is we don't need rate cuts for this. It's liquidity that drives it. Right. Rate cuts are actually a delay on the liquidity that happened ages ago. So if we go back to 1994-5, we had the big hike in rates, the bond market freaked out. Everyone thought we were going to go into recession. We didn't have a recession. The Fed cut in 95, 25 basis points, then a 50. Rates were still miles higher than the low from 1993. And the Fed was on hold until 1998, until the Asian crisis. That was the strongest period of outperformance in market history. So I just like stability is fine as long as there's liquidity. So I think it's a red herring.
Yeah, I agree with that sentiment. Like, who would have thought we'd hit all-time highs in pretty much every asset class with rates at 5.5%?
Nobody.
Because it's not rates, it's liquidity. Everyone's pumping money. So that's the thing I'd be looking at. I care far more about what's happening with, let's say, this Japanese bank situation where they could be printing hundreds of billions to try and help bail out that ecosystem. That seems to be me to be a far more interesting thing than just rate cuts. I think rate cuts, like you said, they're a red herring, really.
Rate cuts matter for Main Street. Liquidity matters for Wall Street. Let's put it that way.
Yeah. Okay. Next question from Andrew. He would love to get your take, Raoul, on the ISM manufacturing PMI. Does it need to drop lower, or are we done and back into expansion?
Look, we put a lot of work out on Real Vision. Julian Bittel does tons on this. All of our forward-looking stuff just says the business cycle improves from here. And so there's a bit of chopping around, a bit of noise. Everything says it improves, which is kind of what we should expect into macro summer. We don't need it to go lower. We don't need to do anything. It's been below 50 for a long time now, one of the longest periods ever, much like the yield curve has been inverted. So No, I think it gets stronger, and that's a good thing. It brings earnings back into the economy. Those earnings get recycled into crypto. When people are feeling more secure in their jobs and all of that, and they're earning a bit more, or their local businesses earning more, money gets recycled. So, yeah, I'm just positive on that.
All right. And I think we have time for one more. I'm going to ask this question because I think it's interesting and always worth considering. This is from AT on YouTube. What would you need to invalidate your bullish view for asset markets? So I guess we've talked about this before in the past, what sorts of indicators we're looking out for to give us a sense of when the tide turns. But are there any near-term risks or things or headwinds that could potentially change your view holistically?
My view would be, you got to show me that liquidity's changed. If suddenly we see the world central banks deciding to tighten liquidity, okay, then we've got a big problem. There's one thing that is not playing ball, and that's the dollar. So the dollar is financial conditions, and the dollar going up is the one thing that is spoiling the party a little bit, which is one of the reasons why this dollar yen trade is so important. But if the dollar keeps screaming higher, then it's going to push rates higher, and it's going to cause financial conditions to tighten, and that's going to give us something to worry about. Not end of the world worry about, but it could stop this whole rally in its tracks for an extended period if that happens.
Yeah. What do you think, Michael? You're muted, by the way.
We had this discussion just a couple of days ago, didn't we, with the other partner that we have, and it's really, I think, more about the unknowns here. Like we've now had quite a big rally, and the only thing I really see happening here is, either like a big big geopolitical event happens before, let's say, Trump gets into office. You start to see, a bunch of aggression around the world, which could happen, or just some other unknown. Like, it just feels as though that's the only thing I could look at and be like, we would see a correlation of one move down just because of how far we've come. We bring up the NASDAQ chart, gold, Bitcoin, like we've had a bit of a run here. So if you to have something that suddenly shook people out, I think it could be a little bit worrying. But the macro setup here just looks so obvious that we're going to have an increase in liquidity to me, and that we're going to go into a more accommodative monetary cycle, that I don't see anything that throws us off there. It's really just me something that, wow, okay, that could really shake us. That wasn't really in everyone's field of view before.
We had the core PCE today, which is the Fed's chosen gauge, is at 2.6%
in line,
and rates are at 5.5%. I mean,
exactly.
That's lunacy. So, and the economy's relatively, subdued, and unemployment's ticking up. So that's madness. But yeah, I don't know what else an event that could do this. I mean, yes, dollar yen, let's say it explodes to 170 or something, and the dollar is the only thing I can really think of outside of geopolitics, which tends to be short-lived. They tend to be geopolitical events tend to be, as soon as anything actually happens, the market rallies like hell.
Yeah, I think geopolitical risks are always present, so that I never see that as like a headwind to any bullish thesis. I think inflation maybe is a concern. Someone sent me a chart of containerized freight index, the containerized freight index chart today, and it's tripled since the beginning of 2024. So stuff like that is worrying.
I would zoom out though. I would zoom out. I think that one got absolutely hammered in 2023.
It did, and also this point in the cycle, commodities pick up as global economies pick up. So you see this kind of stuff happening, but it's such a small weighting in CPI.
Yeah.
I mean, we worry about inflation at the end of the cycle, kind of not at the beginning, I think.
We'll see what happens when Trump's in power and these yelling for lower rates and all that.
Maybe a change in the Democrat Party where we don't know what's going to happen, or God forbid Biden dies or something like that. Okay, that could cause a nasty little fear section, because markets hate uncertainty. Yeah. Well, on that rather uncertain note, I think it's
I think we better wrap up the show. But thanks everyone again for tuning in on REKT Vision. Make sure you're following all of us on X, OSF_REKT, REKT Mando, and Raoul GMI. Next week we'll be back to the exclusive AMA and drink sessions. So that's available on the Real Vision website. I won't be here next week. I'm expecting my first child next week. So you'll have my former colleague at Barclays, actually, Sergio Silva, on with Mando. And make sure you check out Real Vision Crypto at realvision.com/RVC. It will be the same time again next week, 11:30 a.m. Eastern Time, which is 4:30 p.m. British Summer Time. But thanks again.
And also make sure you subscribe to the YouTube channel and get notifications. It's every Friday. This will give you everything you need to know from the week behind, the week that's just happened, and the week that's coming up. So hopefully we're doing you a service. And for those of you watching live, I'm about to do soon my live with Julian Bittle, answering all the questions about that everything code video, that 2.5-hour monster piece. So tune in for that. It's coming up soon. See you, everyone.
Bye, guys.